All right, we are about to start. How is everybody doing? Can it hold on? Can everybody hear me? I think everybody can hear me. Thank you for joining me. And well, today we're going to have a great show. We are going to look at. We're going to start by looking at the U.S. dollar because let me show you first. Let me share my screen. Hold on. Hi, Esatli. How are you? So the reason that I want to talk about the US dollar is because of the big ranges that we are seeing at the moment. So let's start by looking at the DXY, right? The US dollar currency index. The US dollar, of course, is under great pressure, right? And we were actually waiting. We were actually waiting for the possible rejection of the 9180 on the DXY, right? For a possible relief rally, perhaps to the previous highs around the 9320. That of course did not happen. Now we have to actually we're going to remove all the drawings and we're going to look for new levels that we can work with. And to do that, we have to go to the daily chart actually, right? Why are we going to the daily chart? Actually, we're going to go to the 2-day chart just to have a better and a cleaner chart, right? And the reason we're going to go to such high time frames is because this level that we were looking at, right, and the level that the DXY or the US dollar, right, was chopping or trying to bounce from has now been invalidated, right? So we need to look for new levels to look for opportunities to trade the USD, right? And as I see it, there's absolutely no level between price action right now and the 93.37. No, the 90.33 actually, right? So what I'm looking at is the possibility of shorting the US dollar on a rally to the previous lows. Now that we have this level, let's go to the let's start by looking at the 4-hour chart, right? And actually, I'm going to lower this horizontal line because what I'm looking at is the possibility of a rally towards that level for a continuation to the downside. And the reason is because the structure, the bearish structure, is still very much valid, right? We are still making lower highs and lower lows, and even though we saw some compression here, right? This is why we were looking for that relief rally towards those highs for a flush on the US dollar, but that didn't happen, right? So what I'm looking at is the strength right now today. Let's go to the hourly chart actually. This green line right here is the daily open, right? So today we are, or the US dollar is rallying. And yesterday we saw a big bearish move. The bearish move that broke with this level that we were looking to buy the US dollar, right, last week. So right now, the possibilities or the levels that we can look for, right, is the 91.57, which is the previous lows, or the 91.85, which is the actual base that got broken, right? Um, the thing is that right now, if you look at all majors are dipping, right? The US dollar is rallying against all majors. The euro versus the USD is down, let's see, about 43 pips. And the opportunity that I saw actually to buy the US dollar, to go long the US dollar, was against the Australian dollar. And well, the Aussie USD is a currency pair that I don't trade very often, but right now, right now, we are rejecting the previous highs, right? This is a key level. And if we go to the daily chart, you can see that it is actually a level that has been in play for a while, right? So it is a very, very important level that we are rejecting at the moment, right? Let's go back to the 2-hour chart or so. And not only that, but we are about to break with what seems to be a reversal pattern, right? So let's see if we can actually if we can actually trade or put on a an order or a pending order to sell the Aussie against the US dollar, which will be in fact a bullish play on the USD, right? So first of all, let's see if we get the correct risk to reward ratio on this short position. Um, for me, this short position would be valid when price breaks with these lows. The reason is because the immediate structure is a bullish structure, and right now we have printed or we have made a lower high, right? But we are still making higher lows, right? And when I'm looking at a structure, at a bullish structure, I focus on the lows. When I'm looking at a bearish structure, I focus on the highs, right? So in this case, for this trade idea to be valid, price would have to break these previous lows, because if price or when price breaks with its previous lows, it would actually break the immediate structure, and the reversal would be in play. But I don't think that this trade idea gives us a good risk to reward ratio to first target. It's only a 1 to 1.22 risk to reward ratio, even lower, right? It's almost a 1 to 1 risk to reward ratio to the first targets. And the reason that my first targets are at this level is because this is not only the base of the reversal structure, but also a previous high that was broken with and retested before we rallied to the 0.74 level. So I am not. I mean, one of my rules is that um, for me to be able to take a trade, the first target needs to be at least on a 1 to 2 risk to reward scenario. So even though that this setup is actually very good, and that the US dollar is rallying, which is making the Aussie US dollar dip, I don't think I'm going to take it because of the risk to reward ratio to first targets, right? And also because I do believe that this is not a bull market on the US dollar, but a bearish rally for further downside, right? So I don't think that we could actually hold this trade for a swing trade to the second or even third target. So this is the reason that I don't think I'm going to take it, but this is just to show you that this is just to show you that there are a lot of opportunities right now, right? Let's have a look at the euro versus the USD, which is also reversing, and I do have a position, a short position on this one. And the reason is because first targets are about a 1 to 2.47 risk to reward ratio. Let me just remind you guys that this is for educational purposes only, and you should not chase my positions because you don't know how I'm going to be managing them. But let me show you why I took this position. First of all, you can see that we have some very strong bearish divergence, right, with my oscillator. I always look for divergence when I take trades because give me an extra justification, and it makes the setup a little higher probability of success, right? But this level that we are right now rejecting on the euro versus the USD, it's about the 120.80, 120, yeah, 120.80. It's also a massive level on the higher time frames, right? I always look for these key levels in the market because first of all, let me show you. Let's go to the 3-day chart and just have a look at how massive this level is, right? This is back in April 2011, right? Um, when the euro versus the USD dipped from these highs to these lows, we're talking about a um, 2,900 pip move, right? That's a big bearish move. This is actually a bearish market. And what happened here, and also here, is that bears lost control of the move and bulls jumped in into the market, right? And price reversed for a 2000 pip rally. Eventually, bears took control again of the market and they broke with that level, okay? And it was retested again here before we broke to the upside, and this is back in August 2017, and we have not tested this level since August 2017. So this is in fact a massive key level in this market. Now, if we go back to the 2-hour chart, no, just having said that, right? Having said that, not only we faked out, because you can see that bulls really tried to break through that level. And when we printed this rejection candle is when I saw the opportunity to short the euro versus the US dollar below the previous lows, right? Now, this move is all, I mean, I don't think that this move is going to be the beginning of a bear market, right? I do believe that this is just that this could be a deep pullback to the previous broken level around the 119.40. But the risk to reward scenario on this trade was much better to first targets, right? First targets, of course, are the previous highs right here that yield a better than 1 to 2 risk to reward scenario, and then ultimate targets right here to this previous broken and retested level, which yield about a 1 to 4.5 risk to reward scenario. So you see the difference between the Aussie USD and the Euro USD, even though both plays are a bull play on the US dollar, right? You have to choose which one will yield a better risk to reward scenario, right? Because long-term profitability is all about managing your risk and looking for the best setups to trade, right? So my thoughts on this trade, which is actually looking very good, is of course taking profits at this level, which is the previous high, and the reason also that I always focus on taking profits at the previous key level is because I don't know, no one knows if price is going to actually break below that level. And I don't want to be on a trade on a winning position um, for about 70 pips to just look at price reversed on me and stop me at break even, right? So I always take profits on your trades, and yeah, I mean this position is actually looking very good. If you have any questions, just type it on the chat, and I am more than happy to respond to any yeah, to any questions you have, or look at any market you want me to look at. But today I'm really focusing on the USD. Now, gold. Gold, all right. This is actually a little bit cluttered, so let me just delete a few, yeah, a few levels, etc. And yeah, so gold, let's go to a 2-hour chart. Gold is quite interesting. Why? Because this rally that we have seen from the 1776 level broke with the midterm bearish structure, right? So that is something to focus on. And it's going to sound a little bit counterintuitive in the sense that I am really looking to buy gold on that dip. And and I was just talking about how strong the US dollar is in today's session. But let me show you, right? The thing about this level is that um, right here. Yep. The thing about this level is that if price, I mean, if price retests this level, it will probably also retest the white structure, right? And if it doesn't break with the white structure, right here at this point, it would be a great opportunity to buy into this dip. Also, if we go to a higher time frame, you're going to see that that level, the 1816.50, is actually also a key level, right? In historic price action, right here, you can see that this was a level that was heavily protected by bears, but eventually, of course, bulls broke with it. And what happened earlier is that uh, when um, when we broke to the downside, this is the level that bears jumped in to drive price down. Well, right now it seems that gold is really not going to, or that level is really not going to hold. We go to the 50-minute chart. That trade idea actually is no longer valid. All right. Maybe we get a possibility. Maybe we get a possibility to buy into that dip if gold doesn't break with these lows. Why? Because if we are looking to buy a corrective move in a bullish trend, we need the trend to remain intact in the sense that we need price to not break with the lows and create a lower low. If that happens, um, my bias completely changes in this market. But I mean, I'm going to be monitoring this zone exactly to see how price reacts to it, right? Yeah, because let's have a look at targets, right, to the upside. Let's go back to the hourly. I'm not saying that I'm going to do it. I'm just saying that there is a strong possibility that price is going to hold this level. And the risk to reward scenario on this particular trade, I don't think it will be that good. It's about 966 pips. Yeah, almost a 1 to 2 risk to reward scenario to first targets. And then um, if price continues to rally, we have a lot of room to make some really nice profits. And the reason, the other reason that I'm really looking into buying this dip is because we broke with this bearish structure, right? And if this, I mean, this point in the market, this is a very important inflection point in the market, because if this, I mean, if this level, right, holds, the retest will not only be to the key level that we just saw, this one right here, but also the broken bearish structure, right? Which would give that trade a higher probability of success. Yeah, I mean, that's another market that I'm watching. And I'm actually going to leave it on the 50-minute chart because I mean, I could be watching this in the higher time frames, but the thing is that gold is such a fast market that a dip and a reversal could happen very fast, right? So that's the other market that I'm looking at. And let me show you what I was talking about, um, why I was talking about taking profits on the previous or on the next key level. I took this short yesterday on the pound versus the US dollar, right? And of course, my first targets were here. And look at what happened here. What happened is the price, right, rejected the 134 level. It rejected the 134 level and quickly dipped to the previous low, which is my first target, right? And completely reversed and broke with the highs. So that's the reason that I do, even though I swing trade, this is the main reason that I take profits on every single level that I can, right? Now let's look at some equities. Look at gold, right? Let's have a look at that candle. Of course, that this is not yet validated, but we are seeing somewhat of a rejection to the 1818 to 1815 level. So heads up to that. Actually, let's put that on the 10-minute chart. All right.
Yeah, Lando.
Hey, Lloyd, are you here?
Yeah, no, I was here since the start.
How are you, mate?
uh, I'm doing great. Actually, I want to ask your opinion about one pair. Can I?
Yeah, yeah, go ahead. Grab the screen.
It seems like you might have a trade for gold. It's actually bouncing off the levels, right?
I'm sorry, I can't hear you because there's something wrong with my speakers. But if you want to grab the chart, go ahead, mate.
All right. Yeah, I actually just wanted to ask your opinion about one dollar cat
Yeah.
USDSGD. So let me grab the screen. Is it my screen? Yeah. So I was looking at my currency indices, and this is what I have on my screen. So if I change to a baseline chart, you can see that for the cat, it has already broken my 77s, and I'm waiting for a retest of my 77 level. So I'm still pretty bullish about this. And for DXY, it's still pretty much bearish.
Yeah.
Actually, on the same tune as you, I'm waiting for price to actually have some hit 91 and possibly have some sort of retracement. I'm still bearish about dollar anyway. Yeah, though I'm kind of anticipating a reversal, but until it happens, I don't really care about it. So all in all, I'm bullish cat, bearish DXY, and what I have on my screen, let me change back to the normal candles, is this. So you can see that on DXY, currently price has hit my horizontal level, 1.3 on the daily chart. So this is where previously price bounced off. And if I go all the way to the 4-hour chart, you can see that again, this is where price interacted. I'm waiting for retracement back to this horizontal level and then having a swing trade down. Yeah. My target level according to the daily chart, is actually somewhere quite far. Yeah, it's at 1.25.
Wow, that's a big move.
Yeah, because that's where in the past where price interacted the most. I mean, I can actually revise it to somewhere nearer, but my doesn't seem much of significance to me. Yeah, so that's
Yeah,
why I put it at
that
1.25.
that would be my first target actually, and then the 125. Uh-huh. Yeah, I mean, the buys of the US dollar, Canadian dollar are gone in my opinion.
Sorry, what did you say?
The buys, I mean, the bullish trade on the USD CAD is gone in my opinion.
Mm,
Yeah, I mean, I'm also looking for some sales, but I haven't seen a real rejection of that, or the 129.60. My Yeah,
yeah,
129.60, 129.50. We have the same level.
yeah,
Right now, I mean, on the very low time frames, there is somewhat a rejection on the USD CAD. I'm looking at the 30-minute chart, the 50-minute chart, but I'm still not convinced on that trade. But yeah, I mean, definitely looking to short that one. And it could yield actually a big move towards the next target. I really like
uh,
that.
yeah. Actually, I'm on the same page as you. Whenever I look for my trades, I like to look for some sort of divergence, be it hidden divergence or regular divergence. Currently,
Yeah,
at least on my 4-hour charts, I don't see any. So pending the price action for more confirmation. Otherwise, yeah, I'll see how it goes.
yeah, me too. I do like to look for divergences when I'm taking a trade. I don't base my trading decision on divergence, but if there is actual divergence um, on the setup that I'm looking at, I mean, it just has a higher probability of success.
Yeah, so I'll probably cite the same reasoning. Yeah. Because to me, divergence is probably just the change of momentum. So that gives me the added benefits.
Yeah. And what do you think about the Euro USD?
Euro USD, they're going for
Uh-huh.
shorts, right?
Yeah.
Actually, had my where is this? Yeah, I think personally to me that would be a high risk move.
Yeah, I know. But I mean, yeah, I completely agree with you. And but if I'm basing on that trade on the US dollar, it's also high risk actually, because we are in a bear market on the US dollar, and by
Mm.
shorting the Euro US dollar is actually taking a bullish position on the US dollar. But yeah, but that level, I mean, just by looking at that level, mate, it's a huge level on the daily. But yeah,
Yeah,
I agree with you that it's high risk, and I haven't seen that euro currency index chart. And now that you showed me that chart, um, yeah, I'm gonna be more careful with that trade. Yeah, in the sense that it's looking super bullish.
yeah. To me, at least from the currency index point of view, I don't, I, I would I don't have a reason to go into a short euro at the moment.
Yeah, I agree. And right now it has reversed, and uh, it has reversed, and it's testing the previous broken level. And actually, if it breaks to the upside, I will be closing that trade. Just because also I'm looking at the DXY, and the DXY is completely reversing from the previous lows, which invalidates my trade idea. And that's just the way it is.
Oops, we are at 8:59. We got one more minute. How's your
Oh,
goal?
that this half hour goes by super quick.
You were looking at the gold chart just now.
Yeah,
It has actually formed a 15-minute. It has actually formed a test bar. I think you might have a chance.
yeah. I mean that rejection candle is the one that I was looking for that to jump in long on that trend. But yeah, but the thing is that I hold on. I'm sorry. Yeah, I think that that it could be the right opportunity to buy gold for the next leg up. Actually,
I think you do have a.
as discussed earlier.
Yeah. I'm actually also looking at gold longs because seasonally gold towards the end of the year usually rallies. I'm also looking for opportunities to enter it.
Mhm. Oh,
Yeah.
what? I'm sorry. I'm sorry, Lloyd, because I'm really having trouble hearing you, but it's on my side. My speakers are are not working, so I'm listening to you on the computer speakers on my laptop speakers, which are completely ruined. But yeah, you were saying. I'm
Yeah.
sorry.
I'm saying I'm also looking for opportunity to enter gold because seasonally gold should rally towards the end of the year. That's about it.
Uh-huh. Do you have that chart, the seasonal chart?
No, I don't have a seasonal chart with me at the moment.
Yeah, let me
And
see if I can find one.
Inslee was sharing it during on the Sunday.
I'm just googling the one, and yeah, I mean, yeah, this is a seasonal chart. Let me grab the screen real quick. Uh-huh. Yeah, so this is the seasonal chart on gold futures. And this is the continuous contract for the past 20 years, right? From January 1st, 1990 to December 31st, 2009. And yeah, I mean, it's all upside at the end of the year for gold, right? So we are right here. I don't know. I mean, I don't. You don't. I mean, you do not have to follow exactly the seasonal chart with the gold chart that you're looking to trade. But yeah, I mean, seasonally speaking, it's a slam dunk buy at the end of the year, which
All right.
is which is a great thing um, because right now let's have a look at this is the USD CAD that I was telling the rejection to the previous level that I was talking about on the USD CAD and right and like I was saying these moves in gold happen real quick and in my opinion um, the move is gone because the risk to reward to first targets is 1 to 1.3, which is something that I don't do, right? But yeah, I mean, pricing gold is holding this perfect bullish structure, and I mean, if we get another dip, I might be looking to enter, but there's no actually I don't think so because there's no real setup right for me. Um, how about you? Are you looking to enter long gold today, Roy?
No, probably not today. Probably not tomorrow. But I'm usually if I enter go up, I mean I'll still stick to the 4 hour charts until it give me a real actual setup on the 4 hour. I don't think I will actually enter.
Yeah, yeah. I mean, I agree with you, but the thing is that don't you think that if we I mean if you look at Well, we trade very differently, and what would you be looking on the 4-hour chart?
No, no. On a 4 hour chart, I'm just waiting for. I mean, gold is since the start of the week is a pretty bullish momentum. So the 4 hour chart, I'm just waiting for gold to actually either retest my weekly pivot, which is
Oh
a
yeah.
which is a good level at the moment. Yeah. Otherwise, I would actually allow it gold to actually rally a bit more or retest the WR1, weekly resistant one. I'm fine with
Oh,
that.
so you're really looking for a deeper retracement
Yeah.
before entering. Yeah, I mean that makes absolute sense. Yeah, I like that. And the weekly pivot is right there on that area that we were discussing earlier. I mean, this is a thick zone in gold right here. Yeah, I mean, everybody should be with their eyes open on on um, on a setup here, because I mean, if this level holds and the price continues to rally, the upside is really, I mean, it's really big, and the risk to reward ratio on a trade at this level with a great timing would be super awesome. But yeah,
In,
I mean, this half hour goes by very quickly, mate.
for commodities pair, they tend to have a very strong breakout when it happens.
Uh-huh. So I think that we have gone through um, our time, right? Let me see if we have any questions from the chat. I don't think so. Let's see.
Yes, that's about it. Gotta end the show.
Yeah, I mean, Roy wants to know the market bias for this week for stock market. I mean, just by looking at the charts, it's looking pretty bullish all over the place, right? Um, Again, I don't think we have time to go into details through the Nasdaq, the S&P 500, and the Dow, but I mean, very quickly the Nasdaq, right? Um, Very quickly the Nasdaq. This is the level that I'm looking for buys today on the U.S. session. Again, it's pretty high, but it's also a big level that was heavily tested here. And if this level holds, yeah, I mean, we could be in for the next leg up, right? But I haven't had I haven't had a clean analysis on the S&P 500 and the Dow this week. Just on the Nasdaq, and the 12,400 is the level that I'm looking at for buys. Now, if price breaks with this level to the downside, that wouldn't mean that the bull or the bullish move is over, right? But the thing is that I would prefer a deeper retracement back to around the 12,200 or this level right here, which will also retest the current bullish structure. And but if price holds this level, I will be looking for a quick day trade, right? Just because I do believe that this move is a little bit overextended, but again, no one knows what's going to happen with equities, and price might just continue and rally from that level. But in my
Orlando,
yeah, excuse me.
sorry, Orlando. I think we have to leave because Ash and Jeff show is starting soon.
Okay. Yeah, perfect. Thank you everybody for joining us. And I'll see you guys tomorrow. Lloyd, if you're free, you're more than welcome to join me tomorrow, mate.
All right, I will see my schedule. See ya.
Okay, bye.